office. This is not the screen we were supposed to land on. It should be this one. There we go. That's feeling better. That's feeling like where we should be. And yeah, we will get back into our normal stuff. That kind of did throw things off for just a second, but no worries. Good morning. Welcome and welcome all. Today is Friday, August 28th, which you guys know means it is time to get the job done, and that is exactly what we'll do in today's episode and installation of the pre-market prep. So, welcome one and welcome all. There's a couple of housekeeping things I must do. Not only did we miss the good old landing screen, but we also need to share this link. Let's go ahead and share this link over here, and let's just say, here you are. Here we are. There it is. There we are, and here we are. All right, let's say we're live now, not in 5, not live in 5, but live now. Let's do that. Markets are pretty flat. Ahead of Jackson Hole, which kicks off today at 10 a.m. from the man, the myth, the legend, Mr. K-Dub. Okay, good. That's where we need to be. All set, taken care of. Mission accomplished, done. All right, good morning. Welcome and welcome all. You guys know the deal. Let's scroll up to the tippity top of the chat. Let's see who's here with us on a lovely Friday morning. We've got August, again, 28th on the calendar, 8 o'clock on the clock on the current clock, though. It's 8:02. At the tippity top of the chat, we'll give them until about 8:05 to trickle on into the office. We do have Caldy getting the job done at the tippity top of the chat today. First up, we've got Beth Jesus up there towards the top of the house as well. Talent 103, Michael Herman. Mean Boy Long, Steve Davis, Roger Tutt, Oscar Weiss for victory. Buzz, Gut Field Trader again, there we go. Mad Trade King, Bill Lakeside, the Fade Dr. E.T. We've got Art Nemesis bringing some coffees, of course. Buzz, Mad Trade King again, there we go. Teacher Russell with the Breakfast Buffet, Patrick B. John Taylor, Duna B. We've got a friend in the market, Charlie J. C Black, Time Sellers. We have Clotho M, David Price, Ray Rivera, Ganucci. Tizzy Dizzy, good morning. Own Worst Enemy 73, David Price. Pendemonium is here. Who else? President Djibouti, good morning. Tyler Johnson. Did we miss, was that 2 days in a row now? Mr. G is not at the tippity top 3-4 days in a row? Uh-oh. Well, we hope we're doing all right with Mr. G. Mr. G, Friday Fever. Who's got the Friday Fever? Uh-oh. I'll have to check in. Entertain Me, Mighty Mouse is here. Lipid JG, Anthony Wu, Mike Rosales with additional breakfast buffet items. Abacusai, coffees. We've got some donuts, some pancakes, eggs, bacon. Enjoy. Michael Herman is here. C Black, we got a couple times. President Djibouti a couple times. Whoa, talk about a glitch on YouTube. My goodness. Texas Badgers, my screen just totally freaked out. Kilgore Trout is here. Starman77, good morning. Jarrett Madsen, Dirk Fisher Trades retired Rocket Guy. We have Vincent, a.k.a. Tick, the man, the myth, the legend. Otaku is here. Alley Trader, Trucking with Josh the Trucker, of course. Bad Wolf 2044. KK Bionic, the Fed Tracker Fred. Uh-oh. Fed Tracker Fred, what do you have for us this morning as it relates to Jackson Hole? We've got Tommy Twist, Jerry Robbins, Federico, the Great Canadian Goose, Robert Cove. Who else is here? Marcel Fletcher. Armstrong Capital, the Great Canadian Goose, JC, our senior news correspondent. Happy National Red Wine Day in Trading Paradise, the Trade Brigade. Good morning, Matt, and all the brigaders up here in the office. Let's make some money for the weekend. We've got Kahia holding down the 808 State, Philip B. Who else is here? Susan from Virginia Beach. Good morning. Caldy says it's chop suey in here. Yeah, the markets are a little chop suey. What else? They're definitely flat ahead of good old Mr. K-Dub. Let me scroll back up. I just got booted to the bottom of the chat. Let's see if we can pick up where we left off here.
Kumusta Pilipinas? I've got exciting
Really
news. I'm coming home
There's a lot of stuff
December 8th.
to go back up and scroll through.
Filipino
Even
Arena
if
against
Jim Brogan's
Indonesia's
coffees here.
Yeah.
Speaking of, there
Get
they are.
ready for an
Jim Brogan's
unforgettable
coffees are
day.
in the chat. Larry Rose here.
And the
Good morning. PhD.
Inspired the
Doing
next
long song. Good morning, Jared Matt. Me, Scott.
number without
Russell.
This is worth $1 million to you over the course of
And
fries
Flash.
drip in warm water and just wait.
Content.
See that white film peeling off? That is sodium
Renee F.K. Johnson. Friday,
phosphate,
Jay.
a chemical coating used
John
to make
Wood.
cheap shrimp.
Who else is here? How we doing on time? 8:05 and 45 seconds. We gotta speed this thing up. Come on now. Shield self-defense. Sticking looking for 20 Salt Farm kids. Mr. G, there he is. Who's feeling that Friday fever? We just have to be patient. We just have to be a little patient. Who's feeling that Friday fever? Don't forget to sign in at the like desk for complimentary cheese on Mr. G this morning. Miss K911, good morning. Garrett Marlowe music. Or, yeah, Garrett Marlowe music. Got it right. I got it right. I can read, I promise. Ashley Ann is here. Good morning. Who else? Hulk smash the like button. That's true. That is true. We need who else? Where is the big message? The big message. The big. You guys know what we're looking for. Arbitrator Alu Linguist is here. Where is it? Mauricio. Good morning. Tybalt. Good morning. Gustafer. Good morning. Slow Trail Runner. Good morning. Rob Trades. Good morning. Eric, how you doing? We've got Manuel. Sasha, say so. B-Dog, good morning. Nice to see you. C-Link in the house. Miami Beach Broker, good to see you. Duncan Anderson. Big Short. And there it is. American Psycho Capital, tippity top of the Abacus morning to you. We've got registered trademark Happy National Power Rangers Day on this day in 1993. That's the one. National Power Rangers Day. That's what we're waiting for. 8:07. Worth the wait. All right. Enjoy your Power Rangers today because we do have a Power Ranger, and his name is Kevin Warsh. Kevin Warsh steps up to the podium at approximately the 10 o'clock time frame here. And so that'll be important to ensure basically we kind of at least understand that there should be some volatility at the 10 o'clock time frame. We'll see what Mr. Kevin Warsh has to say. I don't know here what I'm totally planning on doing. I might just put the stream on pause and then just fire up the conversation at 10 o'clock, and maybe we'll just start a new one. It's going to be audio only. I'm not going to be speaking. It's just going to be Kevin Warsh. If you want to watch it, maybe I'll overlay the market internal screen or something like that. But no real commentary. We'll be probably busy trading, getting the job done, of course. But maybe we'll just have like a live feed up of Kevin Warsh and the internals. We'll see. Anyways, 10 o'clock time frame is when that's going off. The Task Force Manager. True. Absolutely true. Positively positive in the chat. Just ain't right. Morning. Beth Jesus. K Dubstep. President Djibouti. That's right. So Kevin Warsh steps up to the plate, aka the podium, at the 10 o'clock time frame. Preliminary benchmark payroll revision comes out at the same time, as well as revisions to consumer sentiment and inflation expectations. Jackson Hole is going to continue all day and as well as into the weekend. Okay, that is what we got as it relates to today on the economic calendar. We should be aware of what's on tap for Monday. Looks like we get some G20 meetings over here. Aside from that, not a lot. And just be mindful of any headline risk over the weekend. If you're swinging anything, that is, of course, what we need to be paying attention to. How, what's the climate as we head into the weekend, basically. Jump on over to the Fed Watch tool here ahead of Kevin Warsh. We are seeing a 64.1% chance of a pause in the next meeting, which is September. September is right around the corner. Wake me up when September ends, please. We do have ourselves another hike priced in for the end. This is a pause. A hike priced into the end of the year. That's, of course, December. Then another hike. That's the additional one. Coming in at the April timeframe. This has been pushed. Oh, jeez. This has been pushed back and forth between like April and June of next year. We'll see ultimately where it lands. We also need to see if K-Dub over here, K-Dub, is going to come out and say, no, we're going to drop it down to 4 meetings only per year rather than the current 10. So we'll see. All right. That's it on the Fed Watch tool. Current odds are for 2 additional rate hikes before FOMC and the, of course, Jackson Hole speech today. The odds are pricing 1 and 2. All right, moving forward, here's the earnings calendar. What do we have going on with earnings? Marvel last night. I don't know how the numbers went. I think they did okay, just kind of like fine. Not as good as NVIDIA, but they did fine. And yet the stock is down. Irene, I think they just missed into oblivion. And I think Rubrik did really well also, but the stock was moving lower because it was already priced in based on CrowdStrike's earnings over here, Okta's earnings over here. So not as good over on those names, Rubrik today. But software is still absolutely screaming higher. The charts look pretty good. I mean, I don't know about chasing along, smacking the highs of the move, but seeing if we can't get a little bit of a setup progression on the software names would be, I think, fairly reasonable at this point. Moving forward from here into the top line figures, courtesy of CNBC, what do we see on this lovely Friday session? We've got the Dow futures up about 6 basis points, S&P futures 4 to the downside. NASDAQ futures down about 31 basis points, taking the brunt of the hit over there with Marvel earnings, of course. And the oil futures are down about 75 basis points, 82.94 on the barrel price. The U.S. 10-year is up just ever so slightly, 2 basis points over there, 4.692 is the actual yield itself. As we know, can't really see that thing over 4.7. That would start to be a breakout of the balance range, right? So really paying attention to rates here this morning, especially as it relates to Jackson Hole. All right, that is what we've got going on from that perspective there. As we scroll down, let's take a look through the little headlines. Let's make it big. Let's do the whole 9 yards over here, and we will jump forward. So Iran calls for global pushback against U.S. sanctions. That, of course, is under the premise of diplomacy isn't impossible. Okay. U.S. Navy blockade slashes Iranian oil exports as Trump administration shifts to economic warfare. Marvel shares tumble 8% as the outlook underwhelms despite a 37% revenue growth number. Here we go, Mr. Kevin Warsh. There he is. As we know, he is set to deliver his key Jackson Hole speech Friday morning. This is at the 10 o'clock time frame. My current thoughts are just that he's probably not going to say anything too out of pocket. I don't think that there's really a reason for him to, I don't know, I mean, he's not stupid. These guys look at the markets. Scott Bessent's looking at the crude markets and, of course, regular markets. Warsh is looking at markets. These guys look at markets, right? So I think it would be a little unreasonable to think that he's just going to say something so bizarre that upends the bond market and completely, like, shatters the way that interest rates have been moving recently. I think we'll sort of tiptoe around the ideas that, oh, we have some task forces, we're going to do things new around here, we've got our own sort of way of doing things, and we kind of want to forget the way that the old man, oh, hang on, getting a phone call here. All right. Hello? Oh, jeez, I never thought you'd call back again. What's up? Yeah, I know he speaks today at 10. I know. You're going to be listening in? I know it's kind of maybe a sore subject. You listening? Yeah. Well, I'm sorry I just called you an old man, pal. You know, you were a favorite of ours up here in the office. So thanks for calling. Yeah. Oh, really? He told you that? He's gonna say it. Oh. Okay. Well, thanks for the heads up. We'll keep him posted. All right. Well, hey, don't stick around on the board too long. We know you're dealing with the Lisa Cook thing, all the investigations. Just try to enjoy the pool that you're building up there on the Fed roof. Just try to enjoy the pool. We really, you know, I just want to make sure that you put all that effort in. Just at least dip a toe in the pool once for me. Okay. All right. All right. See you later, girl. Take it easy. Bye. All right. I mean, you must have heard me call him an old man online, but with respect, of course, Mr. J. Powell. Told me a little something. Told me a little something there. We'll see what he does. Kevin Warsh, that is, as we head into the well, because remember, I mean, Powell's still around. You guys know that, right? Powell is still around. He's not just like, you know, flying down to Florida and retiring on a beach somewhere. He's still around doing this thing. So I run into him every now and then. Sounds like he wanted to give me a quick heads up on what might be said today. IMAX says it's open to a sale. Why no one's buying? I don't know. Movie theaters right now? I mean, AMC's doing well, I guess. Marvel shares are down after earnings. Many analysts are still bullish. We've got Labor Department to propose a rule that could lower health insurance costs for some workers. Mark Benioff is getting his mojo back as Salesforce's AI strength quiets the skeptics. I guess Mark can keep the tower after all. Salesforce Tower in San Francisco. Boy, oh boy, as the stock was in the gutter, I was thinking that thing would come for sale, but looks like he gets to keep it for now. Mark, thanks for the SaaSpocalypse ending. Russian forces intensify. We're going to stick to stock-specific stuff, though. Spy Chic backs a, UAE Spy Chic? Like, as in, like, trades the S&P 500. 49% stake in Trump's family crypto bank venture. Interesting. What else is going on here? Taylor Farms, integral to America's food supply system. BioCryst, profitable now. 6 months into the war, BitGo acquires NYDIG's institutional trading business as crypto trading rebounds. AI bursts to the front of Massachusetts Democratic Senate primary. What else? BlackBerry lost the phone war. Now it's betting on cars and robots. BlackBerry actually gapped and went yesterday big time on like sort of the software revival. Stock still kind of looks like garbage, but at least out of the head and shoulders on the daily chart. But we'll see. Judge blocks Trump's mail ballot. AI needs more power. We know that. We have Trump ratcheting up rhetoric against Beijing. Apple's September event, uneven rally in AI stocks. SpaceX shares are doing something very unusual. Options traders are taking note. Mortgage rates are higher, and Greenland fixation puts security at the heart of Iceland's knife-edge EU vote. All right, crappy headlines this morning. That's right, I said it. Garbage headlines this morning. Nothing too good to read into there. It's all about Jackson Hole. All about Jackson Hole. That's the primary thing to be watching for this morning. And of course, that happens at the 10 o'clock time frame. Okay, 10 a.m. Jackson Hole. All right, moving forward, let's jump on over the charts. Let's do what we do best, and let's see what's going on from a 4-hour perspective on those ES futures. Here we go. This, of course, is not the ES in the 4-hour time scale because I've still got a little bit of work to do here. Looks like I just have to do a couple more. Let's go with nice uptrend, and now has the ability to flag out. Ideally has to IHNS on the hourly over 354.5. Okay, let's sorry, just 2 more things to type up and then we'll be good. Let's say B plus looks great. Or shorts still waiting at the gap level 491.5 or descending triangle. Fine. Intel also looks terrible, right? In a good way. Looks great. For shorts, still lower highs at the daily 20 on sustained rallies. 4 through 85.5. Okay. All right, homework complete. Just making sure that that's out there where that needs to be. And now we go on over to what we do best. All right, let's go to the spiders here. Let's give this a refresh. Then we'll hit the ES futures. All right. ES futures 4-hour time scale. What do we see? We've got ourselves, as we know, a pretty decent trend configuration here. There's not a lot of headache from the 4-hour perspective, which might sound crazy to say, but like previous resistance, certainly supporting above it, right? Does that check out as a clean higher low on the 4-hour chart? Yeah, of course it does. 4-hour higher low has been set, and we know that the hourly trend is flipping back to up as we come out of this little range down here. The market did a pretty decent job, I would say, yesterday, breaking up and over this previous low. Right? I got that higher high extension, which means the hourly trend's up, therefore solidifying the 4-hour higher low. Right? 4-hour higher lows on the table now for the ES. So a couple of ways that we need to be thinking about this market walking forward. It kind of means we can't afford to take this out, right? This now must be the key line in the sand. The key line in the sand is the top of the gap from what was the follow-through day over here, and that is roughly around that 76.55s, right? 76.55s is now your must-hold line in the sand for the ES futures. You cannot afford to get back down underneath that, right? If you do, if markets go back down to this low and start taking it out, highs, we'll have ourselves a lower high, right? That's the threat, of course, now on the 4-hour chart. If we go back to local lows, get an equal low, let's say, and then we make a lower low, well, this will just be a lower high to kick off the trend count to the downside for the bears. Right? Jump from the 4-hour chart to the hourly chart. See what's going on from that perspective. On the hourly time scale, I think the buyers did a great job yesterday. Basically staying in this range, saying, okay, capital reversal, held the previous day high pretty well. And now we move higher, right? This is not a bad look here for the ES futures. You kind of have like, think of it always like stair steps or building blocks or Lincoln logs, whatever you like, Legos, right? You're just building another stair step in the upward direction. And ultimately, if this thing wants to pull back, right, this is the key hold on the hourly chart. You can't really afford to take out previous day's low, but even more ideal than that would just be not taking out the pullback low, right, which is value area low. Okay, so as long as we kind of stay over these key reference points here on the ES futures, I don't really think it's the worst thing in the world. I don't think that this is terrible. I think we have some ability for the market to maybe even potentially chop and early next week do this. I think if Kevin Warsh says the right combination of words, we're probably here. If Kevin Warsh says the wrong combination of words, we have a big test on our hands, right? So it's really about does the hourly trend maintain itself today? Does the 1 hour trend, question mark, maintain itself up today? That is the $1 million question for the session. You've got lows, you've got a very subtle higher low. More importantly, this is the key higher low hold, right? If that's the last hourly higher low in the channel, you either do, right? We talked about this just the other day. There's only a number of things that can happen here that keep the trend up. Either number one, we go and set a higher high, right? Higher high would be bullish, awesome, trend remains up. If the market pulls back, we could set a higher low. Great, trend remains up, market is still bullish. If the market does not set a higher low and sets an equal low, the trend starts to neutralize. I wouldn't call it down because we are technically pulling back from the hourly highest high as it currently stands. So there's three things that could happen that prevent us from going into a downtrend, one of which brings us to neutral on the equal low situation, two of which keep us bullish on a higher high or a higher low. That's it. Those are the only things to really be paying attention to. Okay? So where would this ideal hourly higher low be? Into the afternoon pullback level, which is the bottom end of the flat range, right? This is the same level we've been talking about. This is 77.25 right here. Markets should ideally hold that level as a higher low if there's going to be a nice continuation of the hourly trend. Lows, gentle higher lows, better higher low. This would be another better higher low right there. Okay? That is that. Gap rule number 5 did not play out on MU yesterday. Value was completely overlapping to down. That was a Trump miracle on MU. just don't conflate the two. Gap rules would have told you that there were no odds, zero odds of an MU late day rally if it had not been for the mentioned DT. So just don't pray for a miracle like that again with classic gap rules. So I'm glad maybe you made some money on it. It sounds like, but just be careful. That's not a standard practice for a stock to do that. All right, take a sip of this coffee here. All right. So that's what we got on the ES futures. This, of course, is the ideal higher low once again, 77.25. Bullish on that notion. Now, the NQ still has some problems. I would say if you're looking for shorts, you probably want to focus on the NQ side. But the ES here, at least, is kind of showing you the right spots. All right. Let's move from this chart over here to the 15-minute chart. Let's get a little bit more granular, if you will. Now let's see what's going on from this perspective. All right. Looks like we need a new overnight high. Didn't get any 8:30 data. There was no 8:30 data this morning. It's not even 8:30 anyways. Markets are kind of pushing here. What do we have? Anything in the headlines? Trump on Truth Social, here we go, 28 seconds ago. Ranchers and farmers have always been a number one priority for me. They work very hard, are smart, efficient, and immaculately clean. But for years, I've heard that they have tremendous problems with the big processors, capital B, capital P, and big processors, who many say are a nasty monopoly. There are essentially four of very non-competitive members. And they make life miserable for our wonderful farmers, capital F, capital R. And I cannot let that happen, can I? So in order to break this wonderful monopoly, in order to break this powerful monopoly, with much of its ownership based outside
I don't know. What did you tell him
I
yesterday?
am authorizing legal documents
Not to come home
in
Monday?
order to allow farmers and ranchers, capital F, capital R, be given the right to process their own food, all caps. This should move quickly.
Well,
Thank you for your attention to this
anyway.
matter, President Donald J. Trump.
Anyway, so I went to
that's
Weldon at 6 o'clock in the morning.
We're higher. I don't know if we're higher
After
because
6
of that,
over there.
but that is.
So I arrived there. I bought my
usually
2
markets
euro,
do
and I
respond to
found the door for PVC. Okay. Okay, I know what to do. Problem is, I have my Mini, but I think even with the Mercedes, I pass for.
Yeah, markets are just kind of popping.
Okay, but now I know the door that I need to buy.
It's not like this
You want avec vitre ou sans vitre?
trading at 7,800. That's not what that is not.
Pourquoi? Pourquoi avec vitre?
All right. ES futures. Let's jump into our.
Je vais regarder c'est quoi le moins cher. Okay.
In terms of what we're looking for on this morning session, or how we're approaching the opening bell. As we know, we always start by asking where we're opening relative to the previous day's range. The previous day's range is right about in here.
Bah, tu mets local technique, c'est tout. Bah. Et il ne voit rien du tout après, quoi. Local technique.
Number 1.5 value right there. We're opening above value, right?
But you cannot see with the veil anyway. Parce que le veil, c'est flou.
Ability to draw a pedestal. We'll draw a full column today.
Oh, okay, then.
Spots at the bottom, which is kind of funny.
Okay.
All right, a little bit of one of these.
T'es bien?
Here's our pedestal.
Yeah, no, it depends what it depends on the size on FET. Which one is available or not. If there's one that's available, I will take it. If it's not, then it does not, you know. I'll take what's available because I don't want to buy shirtless shoe.
Kicks out, gives a little whimsy. Patience goes up on that pedestal a little bit. A little bit of piece of patience.
Yes. No words. It's very awkward. And if Franz came here, she needed help with something. So anyway, whatever. I don't care. You know, as long as the work is done, the work is done. Do you know what I mean? It is what it is.
That might bite your tongue in the first 30 minutes of the day.
You know?
Let's
Okay.
move along to question number 2. Let's see what's going on as it relates to the overnight high here, the overnight low. We just made a brand new overnight high. So
Anyway.
I would say we're certainly pressed into, which is bullish. Maybe risk reward favors some degree of a fade off the open. A little bit of, look above the veil or whatnot. It's just, if you do this, drop. E for patience goes right
Yeah,
back.
but Fred, you're calling me so late. It's right now 3 o'clock in here. You have to call me earlier during the day.
How about question number 3?
Oh, okay, but you know, anyway. So what's the thing? It's not the right time to talk. I can talk in 2 hours. But no, you want to say something important or what?
And say on Friday section, we're probably working with, I don't know, approximately 85.
I'll talk to you later. Bye bye.
1 continuing. That percent is, of course, net long. So if there's going to be inventory correction, it may be in the downward direction, which kind of aligns with your question number 2, risk reward. Are really a big fader here? Probably not. I would just think that the market balances ahead of Kevin Warsh and then kind of makes a move. That's the idea. Right? That is the idea. What's up, LS? Good to see you. You're proud of how far I've come with my drawing skills? Well, I appreciate that. I certainly appreciate that. All right. AK says, not your best column. We've seen good. That's maybe not the best, but it holds its own. It holds its own. All right. ES futures, I think mission accomplished for the most part on this. I don't think that there's a lot to dive into on the 3.5 questions. Like a lot of this morning's session is just not making a stupid mistake. I think in the first 30 minutes of the day ahead of Kevin Warsh. I think that's the main objective here. All right, so let's go ahead and clear this up in, I don't know, maybe a 3 count after another sip of coffee. Yeah, sure, why not? A little sip of coffee? Why not? All right, sipping, zipping, and poofing. All right, let's get into some simplified pathing ideas. Like what ultimately could start to unfold here as it relates to the way that this chart structure is playing out. Well, we kind of just sort of mentioned it on the hourly chart. Honestly, the hourly chart could be the best place to do the pathing from. We'll do it on the 15th, but just to say it, the hourly might be better. We want to see a couple of the ups and downs. This is pretty good. Just kind of in here. I gotta start extending these past the end of the end of August, huh? We'll go to the end of September. We'll just extend some of these real quick. We have a September 31st. Sure. Wake me up when September 31st comes around.
Wake me up before you go down. Oh, wake me up before you go down.
Yeah, we can do this one down here. Just a little bit of doctoring up. Not a ton. Not a ton. JC, our senior news correspondent, got us covered with international headlines. Can you believe that? I mean, just so incredible. Our Canadian friends, the GDP, quarter, annualized is actually a 3.3. Forecast is for a 3.4. Canadians, a little bit weaker on the GDP print than forecast, it looks like.
Oh, wake me up before you
okay, looking good, feeling good. Let's just do this, put this back the way it was, and we're rocking and rolling. All right, a little bit of a pullback coming in here after the Truth Social.
Order cancelled.
What do we know is the simplified pathing idea. A base case is kind of this, ahead of Kevin Warsh. Just kind of keep that in mind.
Order
If
filled.
we're going to make a move, ideally we kind of get something that looks like this. Brigade bolt to a higher high. Somewhere in here, you start pulling back, and ideally your next hourly high or low looks like that. That would just continue the trend sequence actively. The markets move up, right? Great. If the market struggles a little bit more so at the previous day's high, how do I want to draw that? I probably want to draw that slightly differently. Steeper, and higher.
Order cancelled.
Higher, there it is. Something that looks like that. You come in here, you start fading this thing off. Right, this is your next hourly high or low after a higher high. Remember, sequencing matters. Okay, if this thing looks into the previous day's high, struggles, comes back down into range, I think you get something that goes here, and you start looking for that 1 hour higher low, right? 1 hour ideal. Higher low. Right, something right around in there. And that might be all you get. That might be all you get for today. Consolidate out, and then we deal with it on Monday. Should the market just open and drive to get down there? It's the same concept. Something that holds that is the ideal higher low zone. If the market fails that, I wouldn't say it's the end of the world, but it's not great. Not great. This is the line in the sand. That is your line in the sand down there.
When?
Not the 4 hour line in the sand. The hourly line in the sand is going to be down at the previous day. 1 hour line in sand. If you fail that, night. Good night. Good night. All right, something like that. And by the way, good morning to everybody but Kevin Warsh, who of course deserves an honorable good day. Good day. Can you believe that? First FOMC meeting comes out and says, good day. Who is this guy? Who is this guy? All right, something along these lines is kind of what I'm looking for on the ES futures. If the market, you'll get a little junction box here, I would say, if you come from the bottom side up. 1 hour line in the sand, high or low, is important. I would look for lift off of that. You could get this and then junction box. It's going to run right into my text on the other one, so I'll just kind of prevent myself from drawing it, but that's the idea. Needs to hold there. Needs to hold. So you just come in, slam this thing through cyan pram, and we say this is 7,700, very straightforward. Very easy level. We come up here and we say, what's this one? It's right there, 77.25. Very easy. This number. We come up here, we slam it straight through, and we say, what's that? 77.55. And then up here, you've got way up top, 77.95. Hit this thing with some cyan. No, not cyan, rather green. Hit this thing with some green and red dots. Haven't done that in a little while. feels wrong to not do it, so let's do it. Well, something that looks like this today is kind of where I would keep the focus, the attention. Atención, por favor. Alright, good. And let's go ahead and throw this up here. Go ahead and throw this right here. We're certainly going to put this over here. This is good night. Night night. Big old red dot. Big old red dot on that one. This would get a white cuff around it. This would get a white cuff around it. These are just counter trend pullbacks in the context of an uptrend. This starts to deteriorate things more meaningfully. All right, this one probably gets a white dotted cuff around it. It's not full bear, but it's also not just a counter trend. All right, something like that is the way I would look to trade that this morning. And once again, remember, Kevin Warsh is at the 10 o'clock time frame. So we go over here and say K-Dub. Ironically, writing K-Dub is more writing than just writing KW. Right? Anyways, K-Dub at 10 o'clock. We'll sip. We'll finish the writing. I am J-Hole. And then, of course,
can you
make
please
sure everybody
translate
can see
this
it.
into the ES, please? Someone posted this, that this
Everybody
is
can
the
see it here.
entry for today, August
Draw a lot of
28,
attention to this thing.
2026.
All right, that's the simplified pathing for this morning as it relates to the ES futures. I've been generally a bit more bullish here this morning as opposed to bearish. I would want to see, any of the paths that sustain over the 77.5 spot are my preference. So any of these pullbacks, like I would say, let's just say 1, 1.5. Let's go with 2 is this thing here, right? And 3 would be opening drive that just gets ratcheted right up with no test higher, right? Those are the first 3.5 sort of ideas that I would focus on to start. This, of course, would be number 4, and this would be number 5 down over here. All right, if I had to sort of rank order the way in which I would prefer. Remember, the market doesn't care about my preference. Let me be clear about that. Any of these things on the screen can happen. But my preference in terms of what I would like to trade, what I would like to participate in, or what I would just generally like to see as being constructive for the broad market is 1, 1.5, 2, or 3, right? That's the preference. That is the preference. All right, let's send this over here where it belongs. Let's just say this is ES path, of course. Good. And then we move from there, of course, into the Spider's Cash ETF, but only after we take a nice slug of this coffee. Something kind of like that on the ES is what we're looking for. All right. Very good. Very nice. And we probably move from there. Let's take a sip of coffee.
So those are definitely the levels for the same Asia high, Asia low, London high, low things for the equivalent in ES. Is that what you're trying to say? What does it mean hedge? Is that when it down flushed?
Frowned upon by some, but I'm mixing some blends that I've got. I've got a just an insane. I got 4 blends in the rotation right now. 4 blends in the rotation. So got a little of this, got a little of that. I'm experimenting with, the darker one, mixing maybe just a half a scoop of lighter blend. And it's great stuff. It's great stuff. You can sort of you can taste the notes of the more floral coffee against some of the darker, richer coffee. It's doing something. Absolutely doing something. All right, one more sip just because it's that good, and then we'll jump into the Spider's Cash. I promise. I promise. No, I'm not in New York. I'm neighbors with Jerome Powell, all right? Jerome Powell doesn't just call me up for fun because, he thinks my stream is cool. It's because we hang out. It's because he lives right down the road from me. That's why. Salt in my coffee. Oh, my goodness. Salt in my coffee? T-Man. I mean, do we have to get security? Salt in my coffee? I don't think so. I don't think so. clear this thing up, shall we? Let's clear this thing up. 3, 2, 1. Ooh. Check up on Zeta. It's gone. It's just in the stratosphere. Don't remind me. Had this thing come in here. I mean, I just kind of traded it like a doofus. I'm not gonna lie. I had it from like 2680. So not too happy about that one. But it is what it is. On to the next, right? Anyway, salt takes the bitterness out. Oh my God, what are we talking about in the chat here? People putting salt in coffee. I mean, maybe I'll try it one day just to see how insane this is, but I don't know. All right, we got to move on over to the Spider's Cache. It's 8:40. It's a Friday. We're having a little bit of fun. Hopefully everybody's had a decent week, market-wise or otherwise. And what do we see over here? Just a pinch. Yeah, I've done non-salted butter, bulletproof coffee. You guys remember that stuff? Anyway, let's stay focused. Spider's Cache ETF, we're up here, especially when it comes to salt and coffee. I don't even want to be having a conversation, being serious. So let's stay focused on these markets. You got Spider's Cache opening up higher, right, pushing a little bit over the last little bit. We had that Trump farmers situation that just came out. So, not that that's really moving the needle all that much, but as of right now, we're opening in range near prior day's highs. So I think it's the same conversation as what we just said over in the ES futures. You've got your sort of old flag range back here. You just rock it, pull back, that's fine, no problem. Hourly high or low, things remain intact. You do something that looks like that, looks pretty good. 774.85 would be the next higher high. Just remember, if you make a new higher high, just try this one more time. So you pull back, fine, higher low, sustain the hourly trend. You move higher, you could do this. You could basically afford another higher low, right? A new higher high immediately gives the market the opportunity to seek a new higher low. No problem, right? So just keep that in the back pocket. If the market's going to look something like that, that is your warning shot across the bow. That is the painful spot. That is, wow, what the heck are we doing here? Back underneath 767.50. Very simple there on the Spider's Cache. Those are the numbers. What's going up? What's going on here in the chat today? I mean, we're getting botted. Are we getting punked in the chat? I mean, C-Link's working overtime over here. What the heck is going on? Whew. We're getting punked. All right, that's it on the Spider's Cache, right? We're good? We're good. We'll give this, just because got to get this thing a sip, and then we'll go back and over the NQ futures. All right, Andy Dre. If you scream, right, and C-Link has to delete your message one more time, I don't know what to tell you. We're not learning here, right? Yes, team went up quite a bit. Okay, there's nothing to do with it now. Stop screaming with all caps, right? Let me scroll back up because we did miss something here from XOXOXO Gaming. It's 3 X's, 3 O's. Don't you forget a single grouping, pairing of X's and O's. Many don't know that lighter blends contain more caffeine than darker ones. Happy blending. That is true, right? The darker the blend, the more you've burned off the caffeine, the less strength in terms of the jitters that you might get. So XOXOXO Gaming with the coffee knowledge. This guy knows what he's talking about, right? I love it. Love it. All right. No yelling in the office. No all caps. No, just follow the rules. Shoes off when you come up into the office. Do not disturb the finest Persian rugs up here in the office. Shoes off when you come up here. Right. Rule number 1. All right. Oh, Friday rules were mentioned in the intro, my friend. In a wave flow. They were mentioned in the very intro. Friday rules because Friday rules, right? Anyway, Spider's Cache done. Let's jump on over into our NQ futures. Let's take
What
a
is
peek
going
at the
on?
NASDAQ. Let's see what's going on over here. Let's go up to a 4-hour time scale chart to start, and let's keep rocking through our time frames. Just go over here and double check something. Now we're looking like we are in the driver's seat and where we need to be. All right. So jumping on over to the NQ futures, which is a great spot to be at approximately 8:45 on any given weekday ahead of market open. What do we see over here from a 4-hour perspective? What the heck is going on? I just keep seeing all these messages deleted by C-Link.
What are we doing over here? Hi. Night night. Night night. I'm bringing out the executive band hammer. All right. Oh my goodness. We're getting botted this morning. We're actually getting botted this morning. Straight to jail. Straight to jail. All right. I think I've executive banned a few. This is insane. This is absolutely nuts. Uh, all right. Let's try to focus on this NQ. Let's see what's going on over here. NQ futures. I'm trying my best to do the executive ban hammer on the bot thing, but I can't promise it'll be perfect. All right, we got ourselves a low off the 200 SMA. We've still got ourselves the potential for like what I would consider a weekly higher low. We know we can't really call this a daily higher low, and the reason behind that is because of this over here, right? We've undeniably and unfortunately made a lower low in the trend count. Now, I do think the market's trying to improve, right? The market is trying to improve. You're certainly getting a little bit of lift through here. We're back over the follow-through day low. We're back over the daily 50 SMA. There are some improvements out there in the market, right? So as it currently stands, improvements. But if you're a bear, it's like now or never. It's right here. It's right here. If you are a bear, you basically want to see what? You want to see this market look above and fail. You want your risk reward to start playing out like that. If you want shorts, you got a 2-day bounce shaping up here. You know, you're not below the moving average set anymore, but you are below this earnings, the gap from last week, right? And so a look above and fail there, you know, not terrible. Risk reward to the downside, right? Depends on how you feel about the market. Depends on how you feel about AI trade. These software IGB names, are they going to be strong enough to lift things, kind of keep things intact, or is hardware just going to overcome it? You know, SMH, stocks, whatever you like. Is that just going to overcome it and drag things and act as, here we go. Oh my goodness, my grandfather would be so disappointed in me. Try that again. Oh my God, still so disappointed. Still so disappointed. I mean, it's not terrible. Please forgive me, Fran. Not terrible. No, a little something like that. There's your anchor. There's your anchor. This guy, let me tell you, this guy, any receipt could be at a restaurant, could be at a gas station, could be at whatever. That's how we would sign the receipt. Talk about a true salty dog. Talk about a salty dog, my friend.
Order cancelled.
Anyway, um, there he is. NQ futures. Is the SMH going to act as an anchor and just yank this thing lower? Certainly could be, right? If you get a little something that looks like that. Moving forward to the hourly chart, let's just go on down through the time frames and see what's going on from this perspective. We've got ourselves what? Inverted head and shoulders, something that looks like that, right? This is maybe in play. Maybe you're holding up over the daily 50 SMA. Maybe this market wants to balance out over here and go up and out into the gap. Maybe the market wants to look above and fail ahead of K-Dub, right? That's the one thing that we just got to keep in the back of our brains. K-Dub. K-Dub. I'm just going to say W because it's easier to write. Kevin Warsh. Kevin Warsh. Okay, so I see the rounded little low in here. I see the reclaim of the 50. There's a little sliver of gap that exists underneath. Let's go to the 15-minute chart. Let's try to make heads and tails of this. Previous day high would have been right around in here. Just doing a little bit of homework. Like this. All right, good. Send that to the end of September. September 30. Oh, that's way too bright. That's way too bright. 80% opacity. It's not 50. 80% opacity. There we go. That's looking better as a gap. All right, so that's kind of the way that this thing's playing out. Now, it's notable that the NQ popped in here, but we're still just inside of that range, right? If we're thinking about the trend count of the market, let's go back to the hourly. Wanted to put that gap in there so we can make a little bit of a better sense of what key levels need to hold. This is the bottom end of the junk drawer. This is the gap. Technically, it's bullish to have an unfilled gap below us. It's also still bearish to have this unfilled gap above us. So, heads and tails there. It's kind of, they both kind of counterbalance each other a little bit. Nonetheless, I would think if we're looking for this market to be constructive, we need to continue to hold the unfilled gap below us, or at bare minimum, if the gap fills, we need to see a gap fill reversal off of that spot, aka, this market turns around or whatever, gap fill reversal, hold the daily 50, got to close above it. Got to close, I would say a couple of lines in the sand, there we go. A couple of lines in the sand for the market here headed into the weekend. You probably want the NQ to close over the 50 SMA. You probably want as close of a close as possible, if not just higher, but to the previous day's high, getting into this overhead gap from here. If we could do that, right, let's think about what that actively does from the hourly chart sequence. Remember, I did just flip this back to the hourly chart. We're no longer in the 15. Let's gather our thoughts. Let's think about this methodically. If the hourly chart trend is down, highs, lower highs, lower highs, lower highs, lows, or maybe even just start from here, lows, doesn't matter, lower lows, lower lows, lower lows, lower lows, we know the hourly trend was down, right? We now know that the hourly trend is flipping back up via the break of this, bringing us a higher high in the count, which means, like we just said on the ES futures, we basically have two things that must happen today if the market's going to remain, what I would say reasonable for buyers to continue to remain optimistic for. Number one would be if the market pulls back, we ideally must hold a higher low actively in this sequence near the gap close we just mentioned. The gap closes, by the way, up against the Wednesday high of day. That's 370. 29, 370 is like pretty much, it's not the line in the sand high or low. You could technically get the bottom of the range again at 29.3, but 370 would be the ideal higher low, right? That preserves the trend. So let's say we pull back, right? We do this. It's a higher low, right? We're still bullish. Lows, higher low. Or the market lifts itself into this gap. We naturally get a higher high, which keeps the trend up. And even if we pull back and fade off the gap, whatever, let's just get rid of that HH for a second. Put it on the left-hand side, HH, highest high. Even if the market pulls back and flubs off the top of the gap, whatever, right, that is going to give you a new active sequence for this. Higher, low, here, right? That's good. Now, we usually don't really talk about gold here on the channel, Jano Piano Player. I like the username, though. Hopefully, I'd love to hear some piano. If you have any videos on your channel, maybe I'll check them out after the show. But we usually, I'm not a huge metals trader. I've never really fared well in gold and silver. We kind of tried to participate in the parabolic short on silver. I think probably came out just flat, won a couple of attempts at it, lost a couple of attempts at it. Remember trading ZSL a couple of times back then. It's just like a year ago or whatever. But not really a big metals fan. You got to kind of trade them overnight. You got to use the GC futures or something like that. So I'm not your guy for metals, right? I like to stick in my lane, do what I do best, and what I do best is broad market, big mega cap tech names and high beta momentum stuff, right? So I'm just going to shoot straight with you. I'm not your guy for gold. All right. Anyways, these are the two outcomes that I'd love to see for the NQ. Oh, we love some heavy metal. That's great. Great, awesome, heavy metal. Metallica. That's heavy, but there's heavier. There's definitely heavier. All right. Those are the two outcomes on the hourly chart that I'm looking for here on the NQ futures as it relates to upside, sort of targeting this gap close if the market really gets into gear. Now, what would it take for the market to do that? You're probably going to need a heck of a speech K-Dub on Jackson Hole if the market's going to get there, right? You're going to need a very dovish. You're going to need a dove of all doves if you're going to get here on Jackson Hole. Or, the counter argument here actually might be something like, if Kevin Warsh comes out as a dove, the market's going to see that as being incredibly, non-genuine and maybe punishes the market, right? Your bond vigilantes come out and say, we're gonna look straight through this guy. He's dovish? Are you kidding me? No way, right? And then they just sell the heck out of the bonds. Rates go straight up, right? And then what else? Momentum do probably down in the market. So that is that could be the counter argument if K-Dub comes out too dovish. If he comes out neutral to dovish, I think the market can withstand that. If you, like, let's just say, let's bring out the spectrum. We haven't brought out the spectrum in a very long time, right? Let's put doves over here, and let's put hawks over here. If K-Dub comes out maybe somewhere in here, right? If that's the look, market probably digests that okay. If he comes out all the way over here, market's probably like, something's wrong. This isn't right, right? You're just saying what you've been paid to say, and you're full of it, and we don't believe you, right? So that would be not good. Now, if he comes out over here, I think this is maybe mildly down, something like that, right? This would be down, by the way. This is mildly down, and then if he comes out over here, oh my God, buckle up, right? Just forget about it, pack it up, market's got to be zero. If Kevin Warsh, the non-interventionist, comes out super hawkish, yeah, we gotta raise rates, and I think we might have to do it sooner than we thought. And oh my God, this isn't looking great. And inflation's out of control. This is unacceptable. And yada yada yada. Inflation's a choice. If that's the situation, whew, night night to your daily 50 SMA. Good night to the 50 SMA. So that's the way I'm thinking about this. It's kind of a counterintuitive spectrum over here. With if he's too dovish, right, the credibility issue is right back in the spotlight, right? Here's your little spotlight, right? That's credibility. Credibility issue is right back in the spotlight. I don't know what the spotlights look like. They have this, and then kind of like on a little thing, I guess. I don't know, on like a tripod. Oh, this is maybe looking worse and worse as I draw more and more of it. But you get the idea. Anyway, there's your spotlight shining down on the Fed credibility. Okay. All right. Let's get into some simplified pathing, perhaps, on these NQ futures. I think that's what we need. Pathing next. Ricky Springer. I mean, that is a Kevin Warsh quote, right? Inflation is a choice. All right. Let's clear this thing up. Let's take a peek at the 15-minute chart for some pathing ideas on the NQ, and then we will move forward, of course. How's everybody doing on a Friday? Everybody feeling okay? Everybody going to go into the weekend feeling okay? Hopefully, right? All right, let's get it done here on the NQ futures. Let's just do this. Yeah, that's fine. All right. As it relates to the 3.5%, they're identical to the ES futures. There's no real need to overdo it and rehash all of that. If the market is going to look above and go, you probably need acceptance into the gap, in which case, in here this thing fizzles out, and then you have a big chance for a higher low. Remember, this is a new higher high. It's the highest high in the hourly count, and therefore there's room for a higher low. Fine, great. That's the continuation play. That's probably about as bullish as it gets. If the market struggles with the previous day high and comes in a little bit, I wouldn't say this is unreasonable. Something that looks like this. We need to see a bounce off of the 50-day simple moving average in here, stay above prior day's low, and if we can close above, that's a decent weekly close. Weekly close, oops, okay, a little bit better. There we go. Weekly close, let's say over 50 SMA. Kind of key, right? The market just kind of goes opening drive into here. I would expect some chop and slop. If we really extend beyond, this is where we must see. This is the 1 hour ideal / line in sand higher low, right? And that's the gap close off of the Wednesday high, which we left the gap unfilled yesterday, but you must hold there, right? Then you chop around a little bit, maybe you get a little bit of lift or something of that nature. That would be bullish for a nice sequence. On the daily time scale,
I'll call you back.
If we really start to lose that, if the market spends more time under a previous day low down here, I don't like the way that little end arrow went, but let's just say, here, and you're pressuring and drifting lower. Problematic. You've lost the 50 SMA again. You are back down near that 29.3 spot. It's really, really ugly if that happens. We could put an asterisk here and potentially say KW credibility issue, right? His street cred is running out. KW cred. Thumbs down. How do you draw a quick thumbs down? Oh, I don't know. Something like this. 1, 2, 3, 4, in, like that, here, flat. All right, there we go. That's a thumbs down. That's not too bad. That's not too bad for a thumbs down. I mean, that'll do. Thumbs down. That's a thumb. All right, let's hit this thing with some numbers. And we, of course, say this is 29. Previous day highs we were before. 29 sevens. Top of the gap, this level right here is 769. Is the top of the gap, the bottom, I should say. The top is technically up here. I would just say watch for 30K. Nice big round number, 30K, easy. Down here towards these lows, we have 425. Enough spam calls. It's been unbelievable this week. I'm actually kind of furious about the number of spam calls I've gotten this week. It's crazy. This is 371 as the gap close, which is your ideal line in the sand. And then this down here is 275, and then we go from there. All right. Take a screenshot of this. That was not, I'll pick up Jerome Powell, but I will not pick up 833 yada yada yada. Your car insurance needs to be renewed. Joke's on you. I don't have car insurance. Why do you need a car when you can walk everywhere? You don't. Joke's on you. On what time frame do I consider a hold or a break definitive? I mean, geez, that's an impossible question to answer. It all depends on what you're trying to achieve. Daily closes are pretty important. If it's happening intraday, it doesn't have to be precise, but I mean, it doesn't really matter if it's a 2 or a 5-minute close, a 15-minute close. It has to happen on volume. It has to be some sort of proof and evidence. Something substantial has happened. It's a near impossible. It's a near impossible question to answer. Just laughing at Kelly saying, "Joke's on you. I don't even have a driver's license." All right, good. On the NQ futures, we got 9:03 on the clock. We're doing all right on time. We know that there is some ability for the market to be a little bit choppy here in the first 30 minutes of the day as we anticipate and await the man, the myth, the legend himself, Mr. Kevin Warsh. All right. I don't know. I'm thinking not on the live for Kevin Warsh. Being honest, there's just going to be. I don't want. I just want to be looking at markets honestly and trading markets. We'll be live with the group, but probably won't be here on YouTube. Just too many moving parts. Maybe if I had like a totally different streaming computer and I had it set up over there and I could do this, and I could do that. Maybe, but just not really set up for that. Right? Set up the trade. The stream is just a nice little extra on top. All right, ready? 3, 2, 1, poof. Let's jump on into. We gave you plenty of time to absorb that NQ path, and let's jump on over to the Q's Cash ETF and see what's going on over here. As it relates to the QQQ Cash ETF. One thing I will say is if you are a pessimist in this market, or if you are someone who has said, you know, we moved the goalposts so many times down here, which honestly is something I was saying as we were breaking down through here, we are finally here. We've got our 2-day bounce into the gap. If you're looking to short stuff, I mean, it's like right now or never, right? You either short this because you think the market's headed lower, you've got your 2-3 day bounce, you think we're going to get a daily lower high, or you wait and you say, okay, I'll do it here. Maybe it's a 3 to 4 day bounce, not just a 2 to 3, 3 to 4 rather than 2 to 3, and then you're shorting it there. This is where your risk reward makes sense on the short side. New money longs don't make a hell of a lot of sense here, right? You're not longing this thing into resistance. Maybe if we're through and into the gap, there's a trade from A to B, that's fine. But as it relates to risk reward, generally speaking, you know, the market could pull back off of this, establish an hourly higher low, or even just chop whatever, and that would be the place to try a short, right? Just because your risk is so small, you know immediately where you're wrong, right? Now, I'm not saying just short this thing off the open. It's not what I'm trying to say. What I am saying is if there's price action that suggests buyers can't get price up and over 722.20, it is very reasonable that you look at this as a gap failure and you could short that with that risk. That's all I'm saying. I'm not saying the market needs to crash and burn and go to zero. I am just saying that now is the spot. Now is the spot, risk reward wise, for shorts. Right? That is it. That is what I'm saying. Any advice on how to manage positions into Jackson Hole? Make sure you have a stop. Know where you're wrong. That's all you can do. If you are uncomfortable, reduce your position size. Sell before the news comes and you're just going to be at the mercy of the market. If you're shivering in your boots and you're saying, oh my God, I can't believe what I'm about to do, that's some pretty strong feedback that you should probably reduce your position size. Right? So, got to be very comfortable with whatever you got on the table in the account headed into the event. Right? If you're shaking right now and if you're very nervous, your body is already telling you what you need to do. That's it. Right? Because I promise you, if you hit sell market to try to stop out manually as we're ripping around because of volatility or whatever, you will get hosed. You will get hosed on the fill, right? Liquidity dries up, volatility increases, spreads widen. You'll get steamrolled on a market order fill attempt trying to stop out. So that's it. All right. That's right. There's always Monday. There's always Monday. You can always retry the trade on Monday. All right, Q's kind of all set here, right? Little look above and fail. This thing pulls back a little bit, not unreasonable. Remember, we've just basically come into this equal high on the daily. Hourly is definitely in an uptrend again. You could pull back. You could establish a higher low here, right? Let's maybe do that like this, this, this. All right, good. The market's just chopping around, not unreasonable head of K-dub. You go gap fill reversal, must hold over the daily 50 SMA, right? Over 50 SMA. Gotta hold above that. You lose this stack. Yikes. Going to zero. Going to zero. Okay, that's it. That's the simplified pattern. If this really wants to grind up into here, that's fine. I would expect to pull back. You know, that'd be another place to attempt it short. So 2 short attempt spots today. That would be here, and that would be here. And a couple of long attempt spots today. That would of course be here on a gap fill reversal, or here, pull back, and then support over previous day low. That's it. Those are the 4 spots to be thinking about. Right? 1, 2, 3, 4. All right, that's it. Key levels all set. Mission accomplished. 9:09 on the clock. Let's go ahead and talk about Friday rules, just because I don't know. We've got 31 billion people up here in the office. I don't even think there's 31 billion people in the world. What's the world population these days? How many people are in the world? Am I way off here? World population. Yeah, we got 30. Yeah, that's right. No, I'm right. We've got 31 billion people in the office, and the world's population is approximately 8.31 billion people. Updated consensus is about 8.31 billion people as of 2026, August 2026 population world check. Of that, you've got China with a whopping 1.4 billion people, India with a whopping 1.5 billion people. How many people live in the good old United States of America. 347 million. Jeez. Jeez, man. Tiny. Teensy weensy. All right. Talking about Friday rules, let's get into it real quick. Today is Friday, which just means it's the end of the week. And when it's the end of the week, it's the end of the week. If you're green on the week, we of course know we want to be keeping it green, right? There's no real reason to turn yourself upside down and just, oh, I'm going to risk all this money because it's funny money and I'm up whatever many R's and I'm going to risk it all in one trade because Kevin Warsh is going to make the market go to the moon, or maybe it's going to go to the center of the earth if you think that it's bearish, right? No need to do that. Size your trades appropriately. Size your trades based on the grades that you give them. Don't just randomly say, oh, it's a Friday, I can afford to lose blah, blah, blah number, and let me risk it all on one. Let me roll the dice and see what's going on, right? That's if you're green. If you're red on the week, if you are red on the week, that is okay. Red weeks do happen. You can go ahead and turn your red week into a responsible week, right? By not doing anything too crazy. Don't trade out of revenge. Don't trade because you think you can dig yourself out of the hole. Just keep it respectful, keep it responsible, keep it rigatoni. Keep it rigatoni. All right? No need to get overly emotional on Kevin Warsh. Keep it even keeled. Execute playbooks, and that's it. Right? That is it. Okay. Friday rules because Friday rules, and at the end of the day, it is the end of the day. Okay. All right, that is what I've got for you here on the NQ futures. Where was I going for? There was something I wanted to look at. Maybe it's over here. Yeah, that's right. All right. Nice. Let's clear it up. Friday rules done. Let's jump on over to the Rusty Russell. Stay in your seats, please. Or before. Don't go anywhere too fast. We know the Russell is going to be in focus today. How could it not be? The Russell must be in focus today because it's very sensitive to interest rates, right? Very, very sensitive to interest rates. Get yourself a balance range here. You're in the middle of that range. Does it break and brigade bolt higher? Does it look above and fail? Does it break and brigade bolt lower? Does it look below and fail? Right? These are the questions we must ask and answer today for the Russell. Your key levels, as always, are still unchanged at 30, 25, and then down here at 29, 95. Those are the spots for the Rusty Russell in this range. Do we go higher? Do we go lower? The only person who knows the answer is Kevin Warsh. KDW. That's not it. KW. It's close enough. All right, that's kind of what we got. All right, you can take a sip of this, and then we'll move forward into the Rusty Russell cash side of the market. Keep it simple on this. Don't overanalyze a range. If he's dovish, but reasonably dovish, not credibility issue dovish, just kind of like mildly, we're going to let the market do kind of its thing. Maybe we don't have to intervene. The 10-year rate is already doing our job for us type of thing. We kind of maybe drift like that. Right? If he's like, oh no, we got to put our foot down. This is unbelievable. We can't let rates, you can't let inflation do what it's doing. Maybe here, right? Maybe not a full breakdown. Again, I think if he's mildly hawkish, he saves space. He saves space, and the credibility issue goes from that thumbs down. I'm not going to, okay, I'll do it. That's not as good as the thumbs down, but that's your thumbs up, right? Thumbs up. I guess those fingers probably need to extend a little bit further out, like that. Just to give it a little bit more. That actually doesn't look that bad. There's your thumbs up for credibility. If he comes out, mildly hawkish. Once again, if this is a spectrum, not the MFEU scale, we're beyond the MFEU scale over here for the war. But if this is dovish, again, this is hawkish over here, and this is the middle. If he's like here, credibility, saved. If he's here, credibility, out the window. If he's here, I think market could deal with that. If he's here, good night. Right? Markets are lower. That's the spectrum of what we got going on. Beth Jesus with the 5 in the chat would love to see a rendition of The Last Brunch after I go full tilt on a Friday and ruin my weekend. The Last Brunch. How about that? Maybe we'll have to do a sketch and we'll preserve that. The Last Brunch. It's a good idea. Beth Jesus, 5 in the chat on a Friday. Of course, we'll see you in the office. The Last Seafood Tower. That's right. That is right. All right, Rusty Russell, mission accomplished. We kind of know what we're looking for over here. We're having some fun, but let's finish this thing up on a strong note with 9:15 on the clock. What do we see on the IWM? You've got yourself that same exact balance range. If we're in the midpoint of the range, not much to say on small caps. If we brigade bolt out to close the gap and consolidate above, more bullish. And once again, you're either going to need a mildly hawkish or a mildly dovish K-dub. You can't afford. Basically, I think the market can make it through any of the this is the spectrum. Market can make it through anything that's like here or here, like within the first third of a standard distribution, right? If you're to sort of say, okay, this is the look of your standard distribution, if we're just within one deviation of the mid, fine. I think the market can digest that and be fine, potentially still bullish. If we're on extreme ends, if we're on like, 2 sigma or 3 sigma moves out, that's where you're really going to get, I think, crushed in markets, right? And markets will just say either, oh my God, this guy's way hawkish than we thought, or oh my God, dovish, what the hell's wrong with this guy? Just like, are you blind? Obviously, you're just getting like spoon-fed lines to say, right? So we just got to stay within one standard distribution of kind of neutral on the K-dub speech, if you will. All right, that is that. The table of tiers. All right, let's get into the core list of companies. Let's get the job done over here. NVIDIA lifting a little bit in the pre. It's just a little tough to want to be a new money long at 230. There's a massive amount of open interest on the call wall there. I would tend to think that this needs some time to digest. Fun and games with earnings, and now we just look for a couple of things. We look for sideways inside days. That's cool. Up and out over 230, maybe early next week. If it wants to go like 2-3 days sideways and then higher. If we pull back, ideally 224.25 and offers that higher low. It's the bottom of this prior consolidation at the top of the prior range, right here, right around in there. What else is going on? Should this really start testing the earnings low? You could maybe watch for a look below and fail. It's kind of like what Amazon tried to do first, right? So, and that doesn't have to happen today. It could be like you're here, and then next week at the midpoint of the week, there could be the time to try it. It'll look below and fail of the earnings low. Moving forward to Apple, see what's going on with Apple. Not a lot that I'm overly interested in. You just have this range. You're chopping near the moving averages. If it's going to break out into the gap, then sure. But for now, it's kind of on the avoid list. Jumping on over to Microsoft. What do we see with Microsoft? Zooming in over here. Macro Hard is not going to take this one over anytime soon. Looking like it just kind of had no hesitations at 500. We're just straight through it. And as it currently stands, that's just going to be the pullback level, right? Probably don't want to chase it long here on like the 6th day up in a row. Day 6 up. Okay. Pullbacks to 500 could get interesting if you're going to scalp that thing along off of that level. If it is going to pull back deeper, you just need a 20 SMA interact and reclaim 500 and then go. Right, that's your low, that's your higher low. Right, just kind of like that. Moving forward to Nancy, let's see what's going on with Amazon. A little bit of a sort of just an ugly chart through here. So I think you need either just a lower high rejection off of the overhead supply at 258.25 to get into the daily 50, or a reclaim of that level. These are the only outcomes for Amazon, right? Something like that. Either you reclaim the level and okay, it's back to being long. You reject the level, it's a short underneath previous day low, targeting the daily 50. When you get to the 50, you try to put back the bone and say it's a higher low. Moving forward to Google, the stock has been trading like absolute garbage recently, so not really a top priority one. It's not. Give me my come on, Thinkorswim, play nice. There we go. This has been fairly ugly. I'm not going to say it's bearish, just because you're just getting very simple range low support at the bottom end of the range. It's going to be inverted head and shoulders. So like over 343 could do a little bit of something for this, but you just got a little work to do. Needs a little bit of work, that Googler. Let's go on over the Broadcom chart. I think this could potentially be a little bit of a gap flow reversal trade against this prior low. If it's not there, then it's the 50. I'd look for it to get turned away at the 50. Earnings kind of complicate this, and just shorting like ABGX or something like that The shares, they're okay. The options, I would dodge like the plague. No way to get involved on options on this thing, unfortunately. Metaverse, not really the best follow-up yesterday to the lawsuit day. The reason I say that is a big, wild rejection of about 580.50. You would think if buyers are going to reinitiate Meta because, okay, we have some clarity, you would think a hold over 580 is pretty pertinent, right? Based on these prior lows back over here. The fact that we settled underneath that, a little bit concerning. I'd be a little bit more open-minded to chop in here if you really want to keep hawking it on the long side, or watching it on the long side, I should say. Your 561 is the key spot. If you can hold up over 561, that looks a little bit better for something like the metaverse. Jumping on over to MU with 920 on the clock. Let's get the job done here. MU just kind of in here, just choppy. Choppy, choppy, choppy. You gap up, you're like, oh, maybe it's a 50 SMA hold and go. Nope. Maybe it's a gap fill reversal hold and go. Nope. Maybe it's a 929 daily higher low hold and go. Nope. Okay, maybe it's a daily 20 SMA hold. Oh, look, we did it into the close, but not so fast. Yeah. Right. So this thing is just kind of a train wreck. I would say stick with your SNDK. SanDisk is potentially doable here off daily 20. Something that lifts, kind of looks like that, is not unreasonable for SanDisk. And then SKHY even looks a little bit better than MU. Did a better job of trying to hang in there near the gap fill reversal. It's not opening well, that's for darn sure. It's not opening well, but at least it's holding in a little bit better than MU. Forget about it on your STXs of the world, your WDCs. I just don't think you really want to be trading these like storage names. It's more about that flash memory stuff. Moving on over to that Tesla. Inverted head and shoulders on the hourly. Can we get up and over this 354.50, or at least can we hold it off the open is the key question. If we can, it's a nice spot for some long attempts. JP Morgan, not much to do with this thing. AMD looks like a short still to me. I would sort of be watching this for either 20 SMA rally rejections or all the way up to a prior day high. Rally rejections 491.50 in here under a 2-day low to even get short under 470. Next up, Intel, last but not least in the core list of companies with 922 on the clock. We've got ourselves the ability for this thing to either just crack and stay low and weak. We've got a descending triangle or whatever, nice knowing you. Or this thing kind of just rallies, attempts to get to the 20. I would short that at the 20. What would you say? 5 days of trading week and 6 if they open up 24/6 trading. Sure. Right. I'd short that there at the daily 20. This thing is just absolutely brutalized. Got lower high here, under 20. Maybe if it's going to reshape up and be like, oh, double bottom, everybody's really excited, right? It's got to be somewhere up here if it's tightening up. It's not here. It's still setting those highs. All right, that is what we've got as it relates to this morning's episode and installation of the pre-market prep. If you enjoyed the video and learned anything new, let me know down below in the comment section or by simply giving the video a thumbs up. If you guys did not hear this morning, you should be Hulk smashing the like button. It's a very simple task. Does not take a lot of effort. I didn't say it. Svetlana said it. Svet said it. Not me. Calby said it. Not me. Let's jump back on over to the ES futures and see what we got going on over here. Any updates before the market ultimately goes ding, ding, ding and is open for business. Here's a 5-minute chart. We rarely look at 5s in the pre, but pulling back a little bit. We did make a new overnight high. Came in though. Right off the prior day high. There you go. So, it's the same concepts as what we were already talking about on the pathing already. You either hold above this and then brigade bolt over the gap close level, struggle here, pull back in. This is your ideal higher low. All right. That's it. That is it. Sky, good to see you. Have an awesome weekend as well. Enjoy some time off the screens. Maybe get some good knowledge pumping through the ears. We'll see if Kathy puts out an episode. Anything of use from her. Who else? Christopher, have a good one. Chris Rodriguez, have a good one. Woe Nelly, implied volatility. There he is. Everybody. Jeff Hill, C-Link, Sarah A, Great Canadian Goose, Johnny Quid. We'd be here all day if we got a shout out for everybody, but just know I love each and every one of you. I hope you have a fantastic weekend. Stay green. Remember Friday rules. Don't do anything that you're going to regret at brunch on Sunday. And certainly don't do anything that you'll regret so much so where you won't be able to feed the fish in a 2-gallon tank this weights. Have yourself a green and fantastic trading session, everybody. And as always, I will see you in the next one.
Hey, Peter. Sorry. Well, when's the market gonna open in 4 minutes? One moment.
Order cancelled. Order cancelled.
Colin, j'ai pas assez d'espace. J'ai mis un espèce. J'ai pas assez. Un espèce, j'ai pas assez. Demain, c'est samedi. Lundi, mardi. Ok. Ok. $4.75 is that then?
J'ai pas compris qu'on a. J'ai pas compris.
Order cancelled. Order filled.
Ok, ça.
Order cancelled.
photo, je vais regarder. C'est ça? FR, ok. Nom, attends. Ok, je vais faire. Je t'ai envoyé le screenshot pour ça. Je vais faire. Ok, je t'ai envoyé le photo comme j'ai fait. Ok, c'est instantané. Ok. Merci beaucoup. Merci Vadim. Ok. Qu'est-ce qu'il a dit? Cola quand c'est le protégé? Pour ici? Ouais. Tu viens? Ok, merci. Merci.
Metallica. That's heavy, but there's heavier. There's definitely heavier. All right. Those are the hourly chart that I'm looking for here on the NQ futures as it relates to upside, sort of targeting this gap close if the market really gets into gear. Now, like, what would it take for the market to do that? You're probably going to need a heck of a speech from K-Dub on Jackson Hole if the market's going to get there, right? You're going to need a very dovish. You're going to need a dove of all doves, if you're going to get here on Jackson Hole, or you know.
pay the whole work for the tiles, okay? It's basically 7,820. Okay, one moment, je peux lui bye. Allô, Badem? T'as reçu c'est fait. J'ai déjà fait. J'ai déjà fait. Ok.
Tu peux m'envoyer une photo avec un WhatsApp?
J'ai envoyé déjà à toi, à ton WhatsApp.
Merci.
Ok.
Merci
Ok.
beaucoup.
Merci, au revoir.
Merci, au revoir.
Alright.
Yes.
Oh my god. Oh my god. I haven't stopped paying since this week. You know what I mean? It's stressing me out. I don't have a lot of money in my account anymore. Okay? Yes. I paid all the carrelage, all the carrelage, all the post carrelage, and now I don't think I will have enough money to pay for everything. We don't have enough money to pay for everything because I have how much do I have? I think I have 25. How much do you owe Poland? I have 25,000 only. No? Yeah, and then that's it. That's it. And then we don't have any other money. How much do we have in total? Yeah, exactly. Yeah, but if you first, the problem is if you ask mortgage, we have to pay for the mortgage. So I don't think we should do that. I cannot see that. I can only see. Yeah, it's 15,000 each. Yeah, I prefer. You know what is the best way to do this is because we need to pay for the mortgage. Okay. So I prefer for us after the grocer, okay? Because we still have to pay Joseph, tu vois? So after the grocer. Yeah. Yeah. Okay. So okay. So with that in mind, what I'm trying to say is if worst case scenario is I don't have an answer. What is 16 is 27,000. 27,000. 27,000. Yeah, but our mortgage. commission because on your contract I read it and it says you only receive commission if you sell 750,000 for the first 6 months. Oh, I don't know how much you have to sell. Sorry, I don't know. It's not 750. How much do you have to sell per year? Okay, bye. Bye. Okay. Super, super duro.
I work also for you. I work also for you. Okay, between. So we have. So everything will be paid for your work translated.
Okay, putain, yeah, I'll pay for the mortgage forward. Result.
They are not giving you anything and you don't have any obligation. You stop any time when you want. So you don't give it how much is it, but you don't ask for it. So go there. So we went there to the things. And finally I purchased injection. And I did my first injection this morning.
Oh my God, you didn't even ask me. Vita, you cannot tell to Jean-Marc this one, friend. He's so against. He is so against. On France, he's so against. In Europe, he's so against.
I paid $39 for the membership. This is mandatory. We cannot do without this. And then I paid for 4 injections, 4 weeks, $200.
It's not a lot.
Huh?
4 weeks or 2 weeks?
4 weeks. The injection is once per week, so it's easy to do. It's like a petite seringue, but you have just to press on whenever you want. So I did this morning, and before to leave, because I'm not smoking anymore in the mornings at home, even on the night. So I went to the office, and before I prepared, a square bread, but I'm doing generally with hard-boiled cheese, right? Generally, these kind of things I'm eating in 30 seconds, 40 seconds, barely 1 minute. But this morning, after my injection, I did this one because I was afraid to eat it. When I ate this one between 10 to 15 minutes, and I feel full right now.
Oi, why didn't you ask me?
Because I want to do your surprise, but I cannot. Because I cannot. I'm not hiding anything to you.
Oh my God, Fred. I'm not judging you, okay? I'm the one who I'm the one who do, but don't tell people in here.
No. I will not tell people. And what I will do is already, if you want this for your Christmas, I can do it. Because I deliver in 2 days. They delivered everything to me.
I don't want it, Fred.
We will see how it's working.
For me, I don't want it for me. I know myself. I don't want it for me.
Apparently, the first week you are losing 2 or 3 kilos.
If I don't want it for me, Fred, I don't want it for me. You know, there's no fucking way I'll do it. You know, when I'm obese, okay, but not right now. No fucking way. I'm not obese. You know what? So upon
I'm not obese, but I cannot support my body like I'm doing right now. So he was working on the Johnson, right? He was working on the Johnson.
Okay, Fred. Okay, Fred. But we don't know what's the effect. You know, for me, I have my boobs done and everything. But okay, so I'm not judging you. I'm not judging you. Okay, I'm just telling you. Oh my God, you didn't tell me. It's a big decision, this, Fred.
Yes, I know. But I just want to please you first, and then to be more.
Oh my God.
But I'm doing it. I look at my photos. I hate that. And he was working for Johnson. He was working for Ryan, Julie. So I don't see why.
How do you know Ryan and Julie did it, Fred? How do you know?
I saw pictures. Come on, they were too thin for the wedding of their daughter. It cannot be without. Impossible.
Fred. It's a big decision, Fred.
Yes, we will. Okay, so I will work on it, and I hope everything will be okay. So I will keep, of course, keep inform you now because I cannot hide, and I don't want to hide. So and we see, but for a moment I'm like we see what's happening.
Oh my God.
Yes, Papa.
It's very brave to do it, Fred. You've been Americanized. Okay, now make money. Okay, but me. Oh my God.
It's a way that I'm doing. It's a way that I'm doing.
Oh my
Okay.
God.
Yes.
But it's surprising. Fucking hell.
Yeah. It's crazy, no?
Order
oh my
cancelled.
God, are you gonna tell the kids or what?
Wait a bit. When I will be back in 3 weeks, we'll see if he's stopping. What's stopping?
If it's working or not. Oh my God, you will not be eating a lot of shit then. Good.
According to what I have this morning,
Does Johnson eat a lot of shit or not?
Nothing. It doesn't. Don't see
Order
him
cancelled.
2 days ago, he was on my desk and just because I was eating
Order cancelled.
some chips. So he ate like 2 or 3, but nothing. It doesn't eat so much. He's eating once per day.
Order filled.
Anyway, we will see how he's working. Okay.
Okay.
I will see when I will put my trousers on. If you're losing weight, we will see in a minute, very soon. So in a few days, I think that Monday or Tuesday, I will know exactly if it's working. And my second injection will be on Friday, next Friday.
So where do you get this done? How you do it yourself?
I get myself the questionnaire is called RO.
Order cancelled.
Rocco.
What's that mean?
ROCO.
What does that mean, Fred?
The name of the brand is RO. Romeo Alpha Oscar. Yeah.
Is your thing? Is that's the name of it?
Yes, I think that was on the website. It's called RO.
Okay. GLP-1. That's what they are called.
Oh my fucking God. Roco GLP-1. RO.co.
And I took the injection called. Hold on.
It's a platform, right, basically.
It's what?
So you're taking Ozempic, basically.
Yeah.
Oh my god, do you feel light or what?
I don't feel light, I feel full now.
D'accord.
I ate a small sandwich.
D'accord.
So I put everything, all information to...
Order cancelled.
It's called O. And my thingy is...
Oh my god. Okay.
My thingy is called what?
Order filled.
I delivered everything with...
Order cancelled.
Ice. With ice on everything.
So you have to buy a new fridge. So Amado will see that you're doing GLP-1, no?
Oh, we know, but doesn't care. You development request as an update.
Oh my god.
Yeah,
How much you have to pay?
$200. Is it we go
We go V. Yeah.
free full pen 28 days supply, free shipping directed to you. I paid $199, but normally we go is $349 now.
So how much is yours?
I have a discount of $150. I paid $199
Why do you have a discount?
because I have the membership of $39 that I paid. Everything like this in the US.
Wow.
You're surprised, though?
Oh my god. You'll be so skinny when you come home. No, did you weigh yourself today?
No, I don't have a weight scale, but I will check on the.
You have a weighing scale in your. I'm sure in your gym, Fred. The gym.
Yes. Well, I see. Okay. Well, I have a lot of work, and we could do it later.
Okay, bye.
Cheers. Bye.
Okay. When am I gonna get paid? Oh, okay.
Order cancelled.
Determine the path of short-term interest rates. And market participants will always try to anticipate what we will do next. But we should not indulge a regime in which market participants are looking primarily to the Fed for their next trade. The economic literature has long described the distorting effects, what it called the Hall of Mirrors problem. If markets rely materially on the Fed's guidance, and the Fed relies on market prices, we're more likely to be blinded to new developments, more likely to be caught unprepared, and more likely to commit errors in policymaking. Now, perversely, market participants are unlikely to bear the biggest costs of the Hall of Mirrors problem.
Order cancelled.
Serious harm is likely to befall those without any financial assets. If the Fed gets inflation wrong and judges the economy wrong, who gets the worst of it? Not the financial high flyers. Hardworking Americans are the ones left to deal with inflation
Order cancelled.
or jobs that suddenly appear less secure. So,
Order cancelled.
forward guidance is ill-suited to normal times. How about the new Fed chief commits at a meeting just like this to some explicit reaction?
Order cancelled.
Surely he could tell us his interest rate path if stated data were to come in hot or cold. Well, I wish our understanding of the economy were so precise as to provide a mechanical, tried and true answer.
Order
Some
cancelled.
simple function, like a Taylor rule, could be rigorously relied upon. but our knowledge just does not extend that far, at least not yet. And other factors most relevant to the proper conduct of monetary policy
Order
will
cancelled.
change over time. Providing forecasts to illustrate the Fed's reaction function works better in theory than in practice, better in the lab than in the field.
Order cancelled.
I am not alone in noticing that forward guidance in 2021, to cite just one example, might well have slowed the policy response to high inflation. In my term as chairman, my colleagues and I will endeavor to construct more reliable models, more
Order
robust
cancelled.
models, and we'll do this knowing that accuracy in forecasting is still just an aspiration. With so much changing so fast in our geopolitics, global supply chains, technology, it's wise to be modest about what we can and cannot know as we sit here today. In the same spirit, we should receive the full range of ideas on matters that may inform the Fed's monetary policy discussions. If the aim is optimal decision making, and it should be, we should not crowd out views on the economy. How then to chart a better path to policy? In the balance of my remarks, I will share with you some key principles that guide my thinking on the appropriate conduct of monetary policy, and then I'll offer my promised assessment of the economy. So let's turn first to principles. First, I've noticed in
Order
this
cancelled.
work, yesterday's news has a way of getting mistaken for what's happening right now. The challenge is to know the difference. In other words, we must interrogate reality. Make sure we're not setting forward-looking policy based on stale or inaccurate data. Nor should we rely on isolated data points. Trends matter most. The Fed's a decision-making agency. We make choices amid uncertainty, and the data upon which we draw must be relevant, contemporaneous, accurate, and as actionable as possible. Second principle. The Fed's actions are intended to ensure that the aggregate demand side of the economy is broadly consistent with aggregate supply.
Order cancelled.
However, all we observe directly is activity. We never see and can only infer what's really happening on the supply side. Hence, evaluating the current and expected balance between aggregate supply and aggregate demand is imprecise. Third principle. There should be no misunderstanding. The Fed's price stability objective of 2%, as measured by the
Order
Basic
cancelled.
Price Index, is a firm, fixed target. Let me be equally clear about another aspect of this objective. Price stability is not self-executing, nor is inflation necessarily mean reverting. It's the Fed's job to deliver stable prices, no excuses. Fourth principle. The Fed also bears responsibility for maximum employment. Achieving both sides of our mandate over the medium term is not an either-or proposition. I do not believe the Fed's dual mandate works at cross purposes. After all, high inflation itself is very harmful to economic prosperity. Fifth principle. Short-term interest rates are the predominant tool to achieve the dual mandate. Unconventional policies to spur economic activity may suit genuine crises, of which we all have much experience, but they should otherwise be used sparingly, if at all. Sixth, money matters. I know it's not fashionable these days, but my view is that money has something important to do with monetary policy. We should pay attention to money created by the central bank and money that comes from the banking and financial system. It's true that financial innovations, the subject of this conference, and other factors alter the mechanics that link the monetary base, the velocity of money, and the broader economy. that is scarcely a reason to ignore the ultimate effects of money on financial conditions and prices. Finally, a quieter Fed, a more purposeful Fed in its communications, is better able to meet its objectives. And we can be held accountable for delivering on our remit, the only true test of our credibility. To borrow a line from General Chuck Yeager, at the moment of truth, there are either reasons or results. So having heard a little bit about
Order cancelled.
AI and general purpose technologies, having heard a little bit about the next policy conjuncture, a little bit on principles, let's turn to the economy today. Given those principles, how do I read the economy? What's really going on outside the window? It's a little ironic, there are no windows in this room, but they're big ones at the Federal Reserve. And we've been using those in my first 100 days, and I expect we're going to continue to use those in the period right ahead of us. Now, you may have read in the July minutes the unanimous view of the FOMC. Labor markets were stable, output solid, but inflation remained too high. A good majority of my colleagues and I thought the wiser course was to await new information in the intermeeting period, especially given possible developments in supply chains, investment flows, and geopolitics, before deciding whether a change in interest rate policy was advisable. And we expressed our joint readiness to act as circumstances require. For my part today, as we sit here, I'm impressed by the overall performance of the economy, which appears to have strengthened. One indicator of strength is how well an economy holds up under stress, how well it holds up under shocks. On that score, both Main Street and Wall Street have been remarkably resilient. Several other observations. Business capex is rising rapidly. The full quarter change in investment in equipment and intangibles has been around 9%.
Order
Its
cancelled.
highest growth rate since 2021. And more than half of the capex growth can likely be ascribed to the build-out related to AI. What about profits? For the firms in the S&P, profits have grown more than 20% over the past year alone. Profit margins are quite elevated relative to history. Overall equity and market volatility quite low. We're staying keenly focused on market internals, watching performance across sectors. Expectations for both growth and capex and corporate earnings are running quite high. I continue to watch the change in the growth rates, the second derivative. The follow-on effects on asset prices, business confidence, consumer incomes and spending are equally important to gauge. Credit spreads on corporate bonds and leveraged loans are near the low end of their historical averages, and issue volumes this year quite strong. Looking beyond fixed income markets to the banking business, in the July so-called SLOOS survey, banks tell us that standards for C&I loans are the easier end of their historical ranges. That helps explain their growth that we've seen this year in these loans. In my view, credit and loan
Order
markets are
cancelled.
showing few signs of policy restraint. Now, certain sectors, like housing and agriculture, are showing strains. But on balance, I would be hard-pressed to describe broad financial conditions as restrictive. Real consumer spending has been healthy despite these shocks, increasing more than 2% over the past 4 quarters. If you combine consumption with the brisk investment we talked about earlier, private domestic financial purchases have also risen. These purchases have increased at a pace of nearly 3% or so far this year. That's a measure that typically carries more signal than GDP. The trend here too, positive. So on the employment side of the Fed's dual mandate, the country's doing well. Labor markets are quite stable. The jobless rate at 4.1% remains low by historical standards and hasn't changed much in a couple of years. Unemployment claims on a 4-week moving average, an empirically robust real-time indicator, are near their lowest level in decades. In my view, the relatively low turnover in today's labor market is partly a result of the significant rematching between employers and employees that happened in the post-pandemic environment. But when labor supply is barely growing, monthly job gains are naturally going to run low. There are always areas of concerns in the labor market. For example, among recent graduates. In general, though, people want to work, by and large, are holding or finding jobs. They may well be concerned about future labor disruptions, but as of now, I believe the labor markets are broadly consistent with full employment. But on the price stability side of our mandate, the numbers are more concerning. The Fed's preferred measure of inflation, the one I talked about earlier, the 12-month change in the PC price index stands at 3.7%, with the 6-month change a little above 4. The comparable measures from the CPI index are also elevated, as are core measures both of PC and CPI inflation. And none of these measures are perfect, but they all tell a similar story. Inflation is running above our 2% target. So the Fed's predominant focus right now should be on prices. So what's our job? The job for policymakers is to capture underlying trend inflation. Easier said than done. We want to gauge whether underlying inflation is rising, falling, or seems to be stuck in place.
It is
We also
stuck.
want to understand not just the direction of travel, but the speed. Each of these broad inflation measures have fallen significantly from their highs of a few years ago, but progress in the last couple of years has been more modest. And while this summer's PC and CPI readings were better than expected, they do not tell me that underlying trends have meaningfully improved. The data also show moderate wage growth, but in my view, when tracking underlying inflation, wage growth has not proven a reliable indicator of future inflation for a very long time. So to try to gauge underlying inflation, I want to tell you about a couple of things I've always looked to. I find it instructive to disaggregate the 199 individual components of the PC price measure. Over the last 12 months, 54% of goods and services in this basket showed price increases above 3%. This is well below the post-pandemic highs of about 77%, but it remains well above the level of 32% in a couple of the decades that preceded the pandemic. Looking over just the last 6 months, the conclusion is similar. 49% of goods and services in the PC basket showed price increases above 3%. Again, this is well below the post-pandemic highs, but still elevated, quite elevated. The recent rise in overall commodity prices also bears watching. What we need to judge is whether the trends we see indicate upside inflation risks. Now, it matters too whether the inflation readings of the past 5 years have seeped into expectations. The good news is that measures of inflation expectations in the medium term, by and large, look stable. And inflation compensation measures from the swaps market send a strong and similar message, especially in light of recent developments. It's a credit to the Fed as an institution, consistent with the best of
Order
the
cancelled.
conditions, that market prices show confidence that we will deliver price stability. And I can assure you, they're right.
Order cancelled.
The thing about market measures of inflation expectations in economic history, I know some economic historians in the audience, is they all tend to look really strong and durable until they don't. These expectations are not pushed around easily, and right now they are very well anchored. But they must be closely minded, and it's the Fed's job to make sure that inflation expectations do not get unanchored. Now, there is one signal nobody can miss. The responsibility for 65 months of sustained elevated inflation sits squarely with the central bank. and that's where it belongs. So here is my standard. We must be confident that underlying inflation is moving to our objective clearly and at sufficient speed. Otherwise, we have work to do. That's our job, that's our mandate, and that's our charge.
Shut up.
So I've covered quite a bit of ground in the last 25 minutes or so. Let me see if I can conclude this way. I stand here today committed to a discipline, not a decision. My Fed colleagues and I are hardly the first to hold these positions in a time of great consequence. We are determined to redeem the time by doing our very best work. For those of you that know us, you'll know the following is true. We take our responsibility seriously, with humility and with resolve.
Order
We
cancelled.
know so much depends on the choices we make. Sound monetary policy helps households and businesses to prosper. When carried out effectively, it broadens and deepens the momentum of our economy and helps to secure America's leadership in the world. And I know that our country needs us to think carefully and act wisely, perhaps now more than ever. It's a tremendous honor to serve once again at the Federal Reserve. I'm truly grateful for the encouragement, good counsel, and the warm reception I've received in my first 100 days from my colleagues. I'm also honored and grateful for the views that I've gotten,
Order
solicited
cancelled.
and unsolicited, from so many of you in this room. For that, and for your kind attention this morning, I say thank you. Let's get on with the rest of the program.
That is Fed Chair Kevin Warsh wrapping up his Jackson Hole remarks. This is Bloomberg Surveillance on.
Tell me that underlying trends have meaningfully improved, more concerned about price stability than jobs. Hard-pressed, he says, to say that financial conditions are restrictive. Two-year does bounce to 4.32. That's the highest since July. 10-year also bounces a bit to 4.7. Let's bring in former Fed Governor Randy Kroszner and our Steve Leisman. Steve, some initial thoughts from you.
Well, I'm going to say that it seems like Kevin Warsh met his critics halfway here. And by that, I mean, let me just set the stage here. He was criticized for not providing his reaction function, how he would react to data that came in. I'm going to say here now, Carl, my initial reaction to the speech is he provided the functions, though he refused to still provide the reactions. And by that, I mean, he gave us a whole series of data points that we hadn't heard before, things he's looking at. PBFP, private domestic final purchases. He's looking at credit spreads. He's looking at the second derivative of change of earnings. And he's giving us his assessments of those in the current economy. He didn't tell us how he would react to those things, but he gave us some pretty strong hints. Says we have work to do if we're not confident inflation is moving to target. He said inflation is responsibility of the central bank. Recent readings do not tell me underlying inflation has meaningfully improved, and he committed to a 2% target on the economy. Said it was in good shape generally, bullish on AI, and stuck to his guns about providing forward guidance. But in the terms of what we're learning how to listen to Kevin Warsh, I think we've gotten more. There's a basis to go on here. So I'll just conclude and say it again. We got the function, but not the reaction.
True, Steve, although I would point to a couple of other things there which may also have been somewhat in reaction to his prior comments. One, just asserting very, very firmly that 2% on the headline PCE is the Fed's inflation target and will remain there, and that the policy rate is the key instrument to try and use to get it there. Those two things he allowed to kind of have a little bit of haze around the last time. And, it seems that even though he did talk about all this CapEx and maybe it leads to productivity down the road, he didn't lean on it for trying to suggest what the next moves might be in policy.
No, I agree with that. And Mike, it's worth to point out the market reaction here. My takeaway was his overall a hawkish speech in the terms that we can expect hawkish reaction from Kevin Warsh. But if you look at what's happened now, I'm looking at the September probability of a rate hike is now 56%. And I believe it was 30 or 35 before the speech. I am seeing now a December probability of 86%. So this was taken as a hawkish speech, and now we know maybe better how to listen to
Kevin Warsh and his ideas about being firm on the 2% target, being firm that inflation is the Fed's responsibility, being firm, as you say, Mike, that the short rate is the main instrument for getting there. The market is taking this as hawkish, and I think it may be the right call here. Randy, you in the same boat?
I think the key thing was that he was very explicit that the interest rate would be the main policy instrument to battle inflation. That was one of the issues that he seemed to not be very clear about before, and
Polly,
caused
did
a
you
lot of
see
consternation
Kevin
in the market.
Warsh
He's now very clear
announcement
about what the instrument
in
is.
Jackson
I agree
Hole?
with
He seems
that's
hawkish.
one of the key
What do you
changes.
think? The
And
market
he
will
didn't say
go down
exactly
or
how he
what?
used it, but he said that's what he's going to use. I think he's been talking about the 2% target, and saying the Fed's committed to that. He's committed to that. I'm not sure if that's the news, but he made it very clear that he said it's the PCE, the traditional thing that the Fed has used. There have been some questions about, well, maybe he would keep 2%, but change how you measure inflation, because that's one of the tests.
In layman's term, what does that mean to me as a trader? Does that mean the market is taking it bearish or bullish?
The different task forces are going to look at, so we wouldn't prejudge any of that. But I think it's, I think it'll help to calm people that he's got a plan, he's got a structure, he's got sensible principles, and monetarism is back. Money is going to be the main key things he's looking at.
That was really, I thought that was personally interesting. Money matters, as he said. Do we need to start watching M2 more closely? Steve, you got us? Yeah, I got you. Oh, sorry, no, that was for me. Look, he talked about that. In one of his hearings, I want to say that he said he was going to bring back M2. It's well to remember it was Greenspan who killed M2, so there's a lot of debate about whether there's any value to that. But if you don't mind, I'd like to pick up on what Randy said, because I made a list of the indicators that Warsh flagged in his speech, the kind of function stuff. So I'm going to, obviously, PCE inflation, looking at both the 12-month and 6-month. You brought up PDFP, which is private domestic final purchases. That's a way of looking at underlying demand in the private sector. It takes out a trade, it takes out inventory, it takes out government spending. He talked about credit spreads of both leveraged loans and corporate bonds. Talked about the second derivative growth in earnings, and the inflation breadth I thought was an important one. We've heard other Fed people mention this idea of what percent of the
Can you
basket
give me
is
the
above
numbers to
3%.
look out for,
What's
please?
really
Over
helpful
under
about that,
on
and
the
what really
ES.
addresses one of the things that the
NSP
critics
one.
were saying about Warsh is, we didn't have a way of measuring what he was thinking. We didn't know what he was thinking about.
Order cancelled.
situation. He didn't. You didn't expect him to talk about the actions at Treasury. He didn't. Anything, though, that he didn't talk about that you would have expected, perhaps, would have been included in his remarks?
No, I think he wants to stay in his lane. He wants to focus on monetary policy. He doesn't want people asking about fiscal policy. He thinks that's the Treasury's role. And so he thinks to maintain independence, to maintain his credibility, he needs to focus on his issues. I think he feels very comfortable with what he got. I think he is someone who is very committed to that 2% target and to the credibility, his credibility and the Fed's credibility. And so I think a little bit of move up in some of these shorter term measures, I think he's comfortable with, because I think he's not probably that comfortable that they have not moved in that direction.
Order cancelled.
But I think he's very happy that that 10-year has not moved very much, because that's kind of the long-term focus on Fed issues, and he didn't want that to change.
Yeah. Last thing, Steve, which people are kind of chuckling about this morning, the speech begins with a couple references to hikes.